This isn't even touching that prediction from ARK Invest that the market cap for Ethereum could surge 56 times to $22.5 trillion, which of course would turn an investment of $9,000 in Ethereum into $500,000. Hey Bowtie Nation, Joseph Hogue here, and following up on a previous video about the price of Bitcoin, a lot of you asked about Ethereum. Now, without stealing too much of my own thunder here, answering that question, can Ethereum actually make you rich? I'm going to come right out and say it, yes. We worked through that reasonable valuation on Bitcoin, finding it could 10 times your money, and I believe Ethereum can do even better. In fact, more than 40% of my own crypto portfolio is in Ethereum, over 180,000 of the 450,000 I have in cryptocurrencies in ETH. And on what I'm going to show you in this video, you're going to see why Ethereum is my top investment, including stocks and real estate. In this video, I'll show you how the valuation of Ethereum is different from Bitcoin, how there is legitimate intrinsic value in this asset. I'll reveal what really affects the price of Ethereum and that rational price predictions based on the real value. We'll be working from the research done by ARK Invest in its 2022 Big Ideas Report, a 132-page report covering the opportunities in 14 disruptive ideas. Over the next few weeks, I'll be covering each chapter in this report, detailing the analysis and highlighting the best investments to make right now. I'll put all those videos into our Big Ideas 2022 playlist, so make sure you check that out. First though, before we get started, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I'm partnering with BlockFi for this video. It takes less than 5 minutes to open an account on BlockFi and you can deposit directly from your bank. It's easy to use. The fees are some of the lowest you'll find, and you can even apply for the first Bitcoin Rewards credit card that pays you cash back in Bitcoin. Click on the link I'll leave in the description below and you'll get up to $250 worth of free Bitcoins when you open an account. Now, before we can forecast a price for Ethereum, the first thing we need to do is understand why this cryptocurrency has any value at all. And this is where we see the major difference between Bitcoin and Ethereum, why I am so much more optimistic on Ethereum than I am even on Bitcoin. So in our Bitcoin value analysis, a lot of that forecast hinges on the value of Bitcoin as an investment. Now, this is the forecast chart from ARK Invest, with each of the use case contributing to that market cap, and we see here the bottom 5 uses for Bitcoin are all in that investment thesis. Whether people buy Bitcoin as a substitute for gold, if corporate treasurers and finance ministers park their cash in Bitcoin, all of this 75% of the valuation, that all depends on that argument that Bitcoin is an investment that will appreciate. And of course, that's why so many old school investors like Warren Buffett and Jamie Dimon still question whether Bitcoin has any value at all. They argue that just saying something is an investment doesn't give it intrinsic value, and they're not entirely wrong on that. Because the truth is, relying only on the idea that someone else is going to pay you more for that investment later on down the road is generally a pretty shitty investing strategy. Obviously, I think there's more to Bitcoin than that, but I also think there is much, much more to Ethereum. You see, Ethereum's valuation is based much more on that use case for the blockchain technology. Now, the blockchain is changing the world in which we live, from decentralized finance to smart contracts. This graph from ARK Invest shows the ways the technology is replacing just traditional finance, from banking to lending, investment, and even insurance. Use of the blockchain to complete these transactions is faster, more secure, and less costly. In fact, this next graphic shows you just how much more efficient it is to use the blockchain compared to those sources of traditional finance. The bars here represent revenue per employee in 6 areas of finance, from banking to brokerage, insurance, and trading. In each, we see the comparison for revenue per employee made at a traditional finance company compared to that made with a blockchain alternative. So just as an example here, Bank of America is able to generate revenue of about $4 million per employee. But look at that compared to what the DeFi alternative Compound is able to do. Over $22 million in revenue per employee. Because you don't have the same overhead costs, security issues, and other costs that you have in traditional banking, the blockchain alternative is over 5 times more efficient. And that is just in finance. Over the next 10 years, we'll start to see applications using the blockchain technology change every industry out there. That's going to drive demand and the price for Ethereum, because these cryptos, they're like the gas that makes that blockchain engine work. You use these cryptocurrencies to validate changes in that blockchain and the technology, giving it undeniable intrinsic value. So our first prediction here, over the next few years, I believe the investment thesis is going to shift from that cryptocurrency digital money idea to the use of the blockchain technology and applications. And this is where Ethereum has the overwhelming advantage. The Ethereum platform has more developers than any other token, and it's giving it a massive lead as businesses adopt the technology. Of the top 50 companies tracked by Forbes that are adopting blockchain technology in their business models, 32 have chosen Ethereum. For example, Amazon Web Services has adopted the Ethereum platform for a new open blockchain standard in a service that's going to help businesses adopt that blockchain technology. And JP Morgan built its digital token, the JPM coin, using the Ethereum platform to facilitate over $6 trillion it moves around the world on a daily basis. In all, the Enterprise Ethereum Alliance has signed 150 organizations, including Cisco Systems, Microsoft, and MasterCard, to the largest open source blockchain initiative in the world. Now, that kind of scale and lead in applications development should drive the coin's value. The fact that Ethereum is not as popular right now as Bitcoin really tells me there might be a better opportunity here to just get ahead of that trend. In fact, ARK estimates that Ether's market cap could jump to over $20 trillion over the next decade as that use of the blockchain replaces many financial services. That would be 56 times its current market value, a return of over 5,500%. Those uses of the blockchain are what drives that price for Ethereum. Every time a change is made to that blockchain ledger, a shared spreadsheet, then Ethereum has to be staked to validate that change. What that does, that has the effect of locking in Ethereum to be used in those transactions. For example, all the decentralized financial applications now use a locked-in value, have a total locked-in value of over $88 billion in Ethereum. That's nearly double the amount used just a year ago and more than 17 times over the last 3 years. Now, something we've talked about on the channel before, with any kind of a network, whether it's a payment network like MasterCard or a social media network, the number of people using that solution in that network has value, something we can measure with Metcalfe's law. And on that network valuation alone, we're seeing much faster growth in Ethereum. Again, the number of users on that platform is extremely important because it's directly related to the price. Active addresses on the Bitcoin blockchain grew 50% over the last 5 years, so that blue line in the graph here. Active users on the Ethereum platform, though, has grown over sixfold from almost nothing in 2017 to really catch up with Bitcoin in the last year. Putting all this together, we can start to make some sense of the Ethereum price predictions that are out there, and I know half of you probably just skipped right to this part of the video, but I truly believe you need to understand what's driving that price, the factors that we've just covered, really to better understand these predictions. Otherwise, you've got no way of making a rational decision on which Ethereum valuation you believe in and whether you should invest. But what is encouraging is that we see in these Ethereum forecasts, it's not just those cryptocurrency blogs anymore. We're seeing deeply researched forecasts out of the old school banks like Wells Fargo, JP Morgan, and Standard Chartered now. Whereas in the past, the major banks wouldn't touch this stuff. They're now starting to treat it as a legitimate asset and recommending it to clients. Wells Fargo is predicting crypto as an asset class could reach an inflection point soon, past that early adoption phase and into what it calls hyper adoption. The bank is even comparing crypto adoption to the internet in the early 90s, just before that mass adoption by everyone. In this overlay chart, we see growth in the internet users really going exponential after that adoption by a few hundred million to over 5 billion people today. Looking at that dashed line here, the crypto users, gives you a sense of the potential for growth ahead. In fact, in a survey last June by Crypto.com, it was found that over 220 million people held cryptocurrencies, up from just 100 million in the 4 months before. Even that, though, is still only puts a crypto at about 3% of the global population and a lot of room to run. We see a range of price targets from the cryptocurrency websites, from predictions of 16,500 over the next 5 years by Wallet Investor to just 11,300 at Digital Coin, and as high as 72,000 for Ethereum by 2030 from Price Prediction. For its part, Standard Chartered's global research team puts the long-term price target for Ethereum between 26,000 and 35,000, and Bitcoin around 175,000 each. And here, I think that really puts this into perspective. That $175,000 target for Bitcoin is a solid 300% return, something that takes decades to make in stocks, but the price target of up to 35,000 for Ethereum, that is almost 11 times the current price, a return of over 1,000%. Of course, this isn't even touching that prediction from ARK Invest that the market cap for Ethereum could surge 56 times to $22.5 trillion, which of course would turn an investment of $9,000 in Ethereum into $500,000. But just going off that use case for Ethereum, what it could replace in the financial world and these rational price forecasts, we could easily see the crypto beat all other investments over the next few years. Check out the link below for up to $250 in free Bitcoin from BlockFi when you fund your account, or click on the video to the right for the 5 ways to earn passive income from cryptocurrencies. 5 low-risk ideas to make money every single month. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.